welcome back everybody. Today we're going to do a brief video on why I think it's important to set levels to use as markers. Here's what I mean. Start with IWM. So this line here, been on my chart for some time. And they will continue to stay there. They're important levels to me that either indicate support or resistance, or you might say supply and demand. These ones stay on there usually for a long time. What we have here, these orange lines, these are the high and the low from the pre-market. So these will get changed every day. Sometimes they play off of them like IWM did today. Sometimes they don't. Sometimes they don't even get close to them. But I like to know where they are, use them as a support and resistance zone. So we're looking at the 15-minute chart, and this is where we opened up. We gapped down, and we had a tweezer bottom. Great look on the 15-minute. Not so relevant here on the 5-minute, and definitely not as relevant here on the 2-minute. So you could have played this off your opening 5-minute range. Set your low here, set your high here, and as you cross up, take your entry. If you cross below, take your entry. But on this particular day, you wouldn't have had much upside on this first push. So when I look at things, I try to look at them from the 15-minute down. What's it doing? Are we within our zones? Are we near our support and resistance? So I knew we were here at our pre-market low, and if you just watch these candles push down and wick back up, you can get a good inclination that we've got some support in this area. It wants to push up. Doesn't mean it will, but when you got strong wicks being formed, pushing back up, buyers stepping in, there's a good chance it's going to continue upward. So we pushed up, pulled back, made higher lows, and this time the body of the candles closed above this trend line, and it sailed up. Sailed up through my 176.60 zone. And then look at this. Later in the day, it topped out exactly where the pre-market high topped out. That was great. Great spot to enter. You could have entered here as it broke below the previous candle for a short, risking a higher high here as your exit, and that would have been what, a 1 to 10 risk reward right there. That would have been a good spot. Several opportunities on IWM, but not the one I liked for the day. I didn't even trade IWM, but this is just one of the ones I still had my drawings up. The next one we're going to look at is the SPX. So I took this line, the 41.85 from Gisachi, shout out to him, threw it up on my chart, and look how well it played off this zone today. Get in here on the 15-minute. So open up on this candle here, go red to green, push up through this 41.6150, and just cruise on up. This would have been a spot to have gone long, but I wasn't watching SPX at open, so I didn't go long here. Like I said, this was a spot to go short, and I got that from Gisachi. Came up, kissed it, beautiful. That would have been a good place for a quick put scalp. Came back up, tested it again, and failed. This is my preferred setup right here. Double test with a fail. So I entered it in this zone right here, moved pretty quick when it started to fail. I was hoping to catch it as it broke the bottom of this small candle, and I got filled probably somewhere in closer down here, and held it off, and I ended up getting out on this candle. I don't know where on the candle it was at the time, but it was this third candle down that I got out of, and that was a 300% win. I'm guessing it was around the top of it, because by the time it got down to here, as this one was sold and this one was still pushing down, they hit 700%. I was playing the 4165s, 0 DTE, so missed out on 400%, but still managed to grab 300%. That's a weird thing to say. And then again, look at this. We came up, hit our level, sold off, came down, tested this zone, which had been resistance, now turned support, pushed up, hit our 4185 again, and this was a red candle. It's white because it's an inside candle. So this one sold off. We had a little bit of resistance still at the 4185, and then managed to push through at the end of the day. This is why setting your supply and demand zones, your support and resistance are important. If you look at the daily here, just follow this 4185 back. There's a lot of times where it comes up and just bounces right off of it. The other thing to look at is I like to set my lines off of what happened yesterday. So when we push up and we have a big pullback, first thing I'm doing, I'm going to my 15-minute chart. I'm finding previous day high. Okay, I don't know what just happened there. Setting my previous day high and seeing what we're going to do off of it. As you see, we came up, pulled back, and we started bouncing off of it. We started showing support off of the previous day high. So I was not convinced we were ready to go yet as far as pulling back any further, and it certainly wasn't looking strong. So you can see here on the 2-minute where we just sat here and consolidated above the previous day high. And then if you were quick enough, paying attention, you could have made a decent move once it bounced, broke this level right here, started forming, stop that, started forming this flag, push up, and break. You could have made a good little amount off of that one if you were ready for it. So off that 50, so you're looking at almost a $9.50 move right there on SPX. And then you get this big sell right here that would have totally screwed you if you would have been greedy and tried to hold on to the full position through that. This one, just like this one, real quick sharp sells, which happened. So, but you see, we came back down, curved back around, playing off this zone down here, which, as you see from previous day, this was another level, and bounced. Are levels everything? No. These are areas for ideas to play out. They're not set in stone rules. So do take it, with a grain of salt. There's always going to be risk that level just gets ignored and is busted through. Just like the 4185 in the afternoon. It broke out and sailed up past it. But these do tend to be areas that can be played. So this is why I set levels, set zones, and usually have decent success trading them in with EMAs. So I never trade them alone, and I typically don't trade EMAs alone. But when you can combine the two together, it makes for a much more higher probable outcome that you're going to win. That's what I got, guys. Take care. See you next time.